Welcome back, traders and investors. We have Phillip Streible on the line. He's a senior commodities broker at RJO Futures. Phillip, how you doing this morning?
I'm doing fantastic. It's a good day in the markets today.
Yeah, and so what do you have on your radar here? Are you the one that had a huge order in the S&Ps yesterday at 1999.75, determined not to let it trade 2,000, or you think that's just a psychological level people are focusing on, and we'll take it out today?
No, absolutely. I think it's a psychological level. I was a little surprised that it didn't breach it. I would expect that when it does breach through it, most likely today it does have that kind of floor put in place and it has the upward momentum. I anticipate that you'll see a sharp spike through that number because a lot of people will have buy stops. If you're short the market, that'll most likely be your psychological threshold where if it goes through there, you'll get out, so your buy stop will become a market order, shooting the market up. But on the other side of the coin, I do think a lot of people are being kind of woken back up and realizing that, hey, my personal net worth has increased, especially with your 401k if you're able to hold on and still add your 401k through that financial crisis. I mean, I know that I've checked and logged into mine here just recently a little bit more than I normally would, and I'm looking at, hey, we've got some inflated values here. Maybe look at perhaps even taking a little money out and start looking at other investments like properties and real estate.
Yeah, problem with those are not. I mean, I've done the same thing too. I've looked at a couple of our long-term accounts, the whole way up 1,600, 1,700, 1,800, 1,900, and any kind of weakness, I'm tempted, to pull the trigger. But of course, you have the proverbial question of where you put the money. Because you put it in the bank, you get nothing for it. I just want to talk real quickly. You mentioned like the S&P 2000 and perhaps some buy stops there at that level. I mean, what's a big pop? I mean, the SPOOs are just not going to move 5 points off that level. I mean, it seems like there's just so much liquidity once it gets going. You might get what are you looking for? A 1.5 pop, a 2-point pop? I mean, it just seems like that. This is just such a grudgingly slow, bull market. And what kind of pop are you looking for if we get through 2,000?
Yeah, I mean, a lot of people refer to those slow moves ups just as melt ups. That's the term that we utilize here in our brokerage office quite oftenly. I'm still thinking that there's nothing really to stop the market from moving up at the moment, and the reason behind that is if you look at some of the numbers like the technicals, like the ADX, that measures the strength of the trend. That's still firm and turning up. Stochastics are in overbought territory, but overbought just confirms that trend is intact. And then the movement up. The last time we were at around this level, just about a month and a half ago, before we saw that big breakdown on nervousness. It was consolidating at this level. This time it's a little bit more of a sharper upward trajectory. So this bull market, in comparison to the last one we just saw, is a lot stronger.
Yeah, it is holding up here. And what about on the downside? I mean, you have clients that obviously trade the S&P futures, long-term and short-term. If there's anybody that, got into that run, that dip under 1,900 or, in the 1910s, 20s, 30s, the whole way up, is there a level on the downside in the front Mudge futures that, you would say, hey, if it's selling as opposed to picking a top, selling on weakness. I like to use, I'm moving my bogey up right now to, the intraday low from yesterday, 92.75, and as well as the low in the pre-market today, 92.25. Now I know I'm getting kind of close there. You give it a little bit more room, the 1980s. Where would you say?
Yeah,
okay.
Basically the way the market has moved up. So when you look at the little pullback we had, I think like about 3 sessions ago, we saw a breakdown. We came down to like 1981. The previous low from the day before was like 1983. These are like on the futures basis. We thought that the market would gain some more momentum when it took out that previous low, but it didn't. It actually closed up near like 1989, and then it's built on that. So the issue that we're having is that when it does break down and it looks like it's going to generate some kind of sell signal, it actually goes into a consolidation phase because the psychology of a lot of the investors out there was that they had missed the upward move and they're coming in and purchasing on any kind of pullback that they can. So that's what causes that level of consolidation. You need a trigger beyond that in order to really break down and get the momentum. So someone who's a little bit more conservative, they might take like that 1980 level, just pull out your magic marker and draw, this horizontal line across and say, hey, if the market gets 2 consecutive day closes below that, then then the fundamentals also shift to a bearish, flavor, then you're going to have some kind of confirmation. But yesterday we saw that M&A activity from Burger King, and that had really caused a floor in the market at the moment.
Let's talk about the crude market a little bit. Crude showing a little bit of life today, coming up towards some resistance here. We had a couple old highs around the $94 level. How you been playing the crude market?
Well, the path of least resistance has been down, and really it's broken down for the last 5 straight weeks. It's really interesting because if you look at all of the geopolitical events that have occurred, much of it has occurred in the last 2 months, so that would cover that time frame. So the market doesn't really be paying too much attention to geopolitical risks. I know that the U.S. is now monitoring areas in Syria for possible airstrikes. You also saw that ISIS, they had captured one of the Syrian, like an air base there. So there are the geopolitical events there. That's going to cause little bids in the market. The main driver, though, again, the market is in a downward trend. You have to look at the supply, especially out of Cushing, Oklahoma. That's our main hub for oil in the United States. If we get another build like we saw last week, we had a 1.8 million barrel build. It brought total supplies up over 20 million. If we get that kind of momentum again, another strong build, you're going to see crude prices reverse and start to go lower, and we should push back down to that $91 to $90 level.
And build, you're just talking about build up in inventory then, correct?
Yeah, absolutely.
Okay. Moving on to the gold market here. Found some support here in mid 1270s. Have mounted a rally. It's just another dead cat bounce in the gold market.
Yeah, I think so too. The gold market, I don't think that there's much behind it. Again, that's another market. No geopolitical risk premium. The underlying fundamentals are strongly against it. You've got an incredibly strong dollar index, an incredibly weak euro currency, and also other foreign currencies. The gold market also pays a lot of attention to the quantitative easing. We believe that the Federal Reserve is going to taper much more aggressively towards the tail end. You could see it where it gets down to this last 25 billion in QE, and all of a sudden, instead of tapering it just another 10 billion, they take the whole lot off in one shot. I think that if you do get some better housing, and also the housing data has been a little bit weaker recently, but if you do see a little bit of momentum, especially towards the tail end of the summer on housing data, and then the employment data starts to improve, that'll give a firmer grasp of when we're going to have the next rate hike or the first rate hike, and that's when I think the shoe really drops in gold. So I think you still got to play gold to the downside, and I think that 1,300 is a good resistance point right now.
Okay, and do you follow the sugar market at all?
Yeah, sugar has just had a massive supply. That's been the problem with that market. Some people think that it's starting this, third wave down, and that'll complete before the market has any kind of response upwards. India, they have faced some flooding recently, which has been damaging the crops. That could be some small catalyst to get the market back going to the upside. If you're going to play it, I think you got to use call options. But again, anytime you have a massive global supply of a commodity and the demand might be slacking a little bit, I think prices, again, momentum to the downside.
Yeah, I mean, this is I've been following the sugar, not trying to pick a bottom of it, but we're trading at levels that have not seen really. You need to go back several years. You need to go back to 2010 and well, excuse me, yeah, September 2010 we got down to 1329, but yeah, that is one ugly looking chart. And what about coffee? You follow the coffee market?
Yeah, 90% of Brazil's harvest is complete right now. Their crop, it was about 40% less than the previous years. The crop itself down in Brazil doesn't look that good. The trees and the plants don't look very good. They've faced drought conditions. They've also faced some rust on the limbs. That's all pushed the market upwards and inflated prices. Now, since those trees aren't looking so healthy, next year they're expecting that crop to even be down another 15%. So expect another squeeze on coffee. We'll probably get that personal hike at Starbucks and start to see prices go up just for the retail customer. But a way to play that market, again, I think you got to use call options. You got to start looking way out in the next year when you get some kind of pullback on this forward crop right now that we're mainly playing. Now, one other thing, if the crop, if the trees aren't looking so good this year, what they'll end up doing is they'll prune them and set them up for next year. Again, it's going to be a lower crop, but in 2016, if they do a good job taking care of the plant, you'll see a bumper crop in 2016, and I think that that's something to keep in mind.
Well, Phil, you know your stuff here. I couldn't stump you with the sugar or coffee. And just one thing I think our traders and investors should pay attention to when Phil was talking about all these commodities, crude, sugar, coffee, he's talking about the supply and the demand. So I know that us technicians like to think that, we can point direction. But when it comes to those commodities, supply and demand rules. And Philip just pointed out some excellent projections going out in several of these commodities. All right, well, we're gonna let you go, Phil. Let you do some trading here on the day. Thanks a lot for the information. It's really good, and I'd like to have you on again.
Well, thanks a lot. Thanks for having me.